Yo, what's going on, guys? I hope everybody's doing well. I'm doing this long awaited video for y'all. I keep getting a lot of requests within the Discord and Instagram DMs about daily bias and how I end up getting my daily bias. And so I'm just going to go with a top-down analysis using the higher time frames to confirm my daily bias. And then from there, hopefully you're able to learn something. But if not, some feedback would be very much appreciated. That way I'm able to reconstruct another video. That way everybody's able to understand and get down liquidity, but not only that, have a determined bias within the market. So I just looked at a random bar at a random date. I don't know what's going to go on or what's going to happen throughout this movement here, but we'll see exactly what happens. Just looking at this market here, I can't really have too much I don't really have too much consensus of where the market would go, so I'd have to go to a lower time frame to see exactly what do I spot. So here I do spot several things. We do have a sweep of liquidity, but at the same time we do have a bearish fair value gap that we are going to meet. But at the same time, within that bearish fair value gap, we did create a rejection block that we're currently in within the 4-hour. So this gives me a bearish state or bearish move since we have higher time frame PD race. So I feel like price would end up targeting this low instead of this high here, just because of PD race and on the 4-hour. And if you want, you could try to confirm it on the 1-hour as well, but it is going to be a little bit more trickier. I would rather just use the 4-hour because it gives you a lot more not a lot more, but gives you it's more compact, and it tells you and gives you a lot more strength because it's a higher time frame PD ray or drawn liquidity. So I'm going to be bearish for here on this next candle move, and to see if we sweep this low here. So let's see if we do that, and that's exactly what we do. And then even then we end up sweeping liquidity right here again, like mentioned here, sweeping this liquidity and sweeping this high here. So we called that out being bearish, and then at the same time we displaced with so much power, so I wouldn't even keep this daily gap in mind anymore, since we did close underneath the CE as well. So I would feel like with the daily pressure of us being bearish, we are going to target this low right here. And that's exactly what we do. And then we do end up creating a daily gap on top of a BPR. So that's going to give me more confluences that, more consensus that the market is going to be more bearish. So I feel like we would end up closing here. And just, via candlestick anatomy, we did close underneath this point of liquidity here. We did not sweep it, so we did close it. So meaning that we did displace it more down here. So meaning that we are going to target previous day low again. And again, we were correct. Now we have a BPR and a daily gap level that we could retrace into, or have some sort of retracement or inverse for us to go all the way to these highs up here. So since we did sweep a ton of liquidity here, put a sweep of liquidity there, we have a relatively equal low as well. So since we displaced with this candle, I feel like we were going to end up sweeping this zone here and then being bullish from there on out. So I want to see price exactly react from this liquidity zone, give us a sweep of liquidity, or at least bring us down here to this level and then go up. If not, we just saw this move earlier. Maybe there's some SMT with the S, but here we did sweep liquidity already, so we already tagged into an external PD ray or liquidity, so it's internal's turn. Alright, so next candle we end up closing underneath, but then we ended up sweeping liquidity and end up going back, so we ended up going up 1,000 ticks or more. So this gives me a good a good outlook that we might be bullish within the next couple of days, or at least tag into this daily gap again or liquidity range within this high up here. So let's see what the market does. Exactly what I told it to do, pretty much. So we end up tagging into this PD array. We end up displacing above liquidity and above this body here. So that means we end up targeting previous day high, or tag the CE of this fair value gap, or if you want, you could do the fib of this fair value gap too, to have more extra levels and where price might want to reject. But here, since we did displace with heavy displacement and we end up sweeping liquidity and taking out the body of this, we're going to be bullish and tag this zone here. Alright, so we were unable to tell which zone got tagged first, if we ended up tagging previous day low and then ended up having a reaction from it, or if we ended up tagging here and then going down and then coming back up. Who knows? But just completely off this rejection here, we rejected 2 daily gaps. So it's the first one that we have read in here, then we tag into the BPR that we did inverse, but at the same time we have another daily gap here, and it's going to be the reasons why we will be bearish there, or at least catch this reversal, since we did sweep liquidity on Fridays. So as previous week high, I mean, yeah, no, it's that's a previous week's low, the lowest high, I guess you could say. So we end up sweeping that, and then at the same time tagging into all the bearish PD rays. So we end up having at this point we might have free game, since we do have a rejection. We might end up tagging to either PD arrays or at least bouncing within these 2 ranges here. So let's see what the next candle gives us. And a straight drop to the liquidity below us, since we did displace everything and we have a lot of candle size within this range. We are going to target this liquidity, so maybe a sweep of liquidity and then a bullish play up, or we might just end up being bearish for the day. So let's see what happens. Alright, so we were bearish for the day. We have a lot of bearish pressure, and we did take out that body and wick with displacement, so we will end up targeting this low here again. So that's exactly what we do, target that low, and then we have a instant reaction, and then we could top that off with more like concepts like fair value gap. So here we don't necessarily tap into this one, but we do tap into the second one here. Actually, no, we don't. We tap into the very third one. So we tap into this fair value gap, we show instant reaction off of it, meaning that we are maybe going to be bullish from here on out. So let's see if we end up tagging this point of liquidity, or at least meeting this daily gap here that we have. So let's see what the price does. Makes it a relatively equal high to this, but at the same time we probably may have rejected this daily gap or a 4-hour gap. So yeah, makes sense. We end up sweeping this 4-hour gap, end up respecting the rejection block, and end up going down. So gives us that bearish play. So we now are going to target this low here. So let's see what price does now. Targets the low, and an instant reaction, going back up again with bullish pressure. Here we have 2 inverse daily on the daily. So we have 2 gaps that get inverse on the daily. So we would target, let me go ahead and delete every drawing. So we would target the next opposing liquidity within the market, which would be this one sticking out. So let's see if price does that. So we ended up putting a relatively equal high within this range here. So we did not end up going to displace the next candle here, but we do have we do keep this liquidity point in mind, because we have to meet it up later on within the next couple of days. So since we didn't really close underneath this body, I would rather target the relative equal high rather than the low. But if I'm wrong, it would be a day that I am just wrong. Alright, so we end up closing in between the two ranges here, but we end up closing bullish. So we end up targeting this range here, or the relatively equal high for the next day. So let's see what we do. We end up targeting this high. We end up displacing it with just candlestick anatomy and the body anatomy. We would end up targeting our relatively equal high since we displaced this body here. Alright, so we had a small hiccup this day. We had probably some consolidation, and we ended up not breaking out to our position. But this, whenever candles close like this in between two ranges, but also like when they close in between two ranges, it's pretty much free game. But you can kind of tell exactly where liquidity is going to go, end up targeting first, and depending on which half the candle does close on. So you could just draw a rectangle using like the fair value gap tool, whatever you want to call it, and just draw it to wick. But if it closes underneath the CE, we most likely might target this draw on liquidity first before we target the high. But sometimes you could be wrong, and we could just end up displacing higher, just depending on exactly what we do. So here we have the next candle, and just like I said, we would target the low instead of the high, mainly because we saw this candle end up rejecting something within this range here. So we would target the low, and since we ended up with bearish displacement over two candles, but we did not sweep this low, and then we put a good relatively equal low, we would target the low instead. So now that we didn't close in, we closed in between two ranges. We just check on which half that the range does close on, and close on the lower half. So we might end up targeting the lower half here. So let's see what we do. And exactly what we do, target the lower half. And then since we displace here, we're going to target the lower liquidity that's down there. So let's see what we do. We don't do that exactly. We end up rejecting it. So let's see what caused that rejection. And it looks like a BPR on top of a, I wouldn't say BPR exactly. I guess we just rejected this fair value gap at a late point. Yeah, we respected this fair value gap at a late point, but at the same time, that gave us our bullish outlook. So just always you're not always just paying attention to the daily. You always want to have, or at least give you a top-down analysis from the 4 hour, and then if you want extra confirmation, confirm it with the 1 hour or 15, and then find your execution within the 5 minute or the 1 minute. But just using the daily candle ranges, I wanted to show you this candlestick anatomy, and then just confirming that with lower time frame, and just going a top-down analysis of everything you're going through. So here again, we would target either previous day high, or we would target Thursday's high up here. So let's see what price does. It goes up there, targets liquidity. Since we displaced above where we will above, we would target up this high, or this relatively equal highs up here. But then we could use the 4 hour to see exactly what we could do. So we might tap into this new week opening gap and then displace higher, but we'll see exactly what we do. And that's exactly what we do. We tap into new week opening gap using this candle here, and then we displace higher, and we end up tagging this liquidity up here, displacing it, and we end up sweeping this liquidity as well. But since we're in a bullish state of mind, we would end up targeting this liquidity, or have some eyes for this liquidity to be met. So we end up closing above. So we just target previous day high again. We left a gap here on the daily, so price may want to retrace back into it before we could reach any high. So let's see what price does. We end up sweeping liquidity and then end up going into a bearish state, but since we close above, we can have this sweep of liquidity in mind before we tap into this daily gap. So let's see what we do. We tap in and displace above this liquidity. So now we would target this candle up here, or still have this target in mind as well. And here we end up being bearish, tap into the daily gap, and then see if we go down to a 4-hour. We see a 4-hour gap get respected as well, giving us more consensus to our bias. So now we would target this high up here, or that high as well. So let's see what price does now. Sweeps price liquidity again up here, just like we said and predicted how the market would end up going up to this point later on. So that's how we were going to be bullish, and that's how I pretty much get my liquidity. So I have a outlook within the daily candle, so I see where my daily candle is, if it's displacing underneath, or if there is a daily gap, any PD array, order block, whatever, CISD that we could just tap into, or if just using candlestick anatomy and seeing how far we displace within the bodies and the wicks could give you enough consensus to go down to the fair value to find any fair value gaps or order blocks or any other PD array within the 4-hour. And then you just want to stack your PD arrays that match, just hammering down to lower time frames, and then matching that narrative that you have already built. So here we have a 1-hour gap that matches up with the 4-hour gap that we have here. So we could be bullish from here after we tag into it, or at least be ready to have a reversal within this point. So let's see if we end up doing that. Yep, and then we sweep liquidity and displace higher, just like we said. We tap into this 1-hour gap, and that's exactly what we do. So now we just hop into a lower time frame, since the 1-hour does match up with the 5-minute. We would have a 5-minute execution. So here we would go in on a inverse fair value gap or CIST displacement, and that would be our long entry using the daily bias, using our hammer down, using different time frames, or giving you that top down analysis. And then from there we would target opposing liquidity and giving you a pretty good trade here. So yeah, that's pretty much how I end up getting daily bias and end up doing a top down analysis to reach my end bias and to follow that plan and said narrative, so that way I have some sort of plan going into the market. That way I'm able to execute and have confidence within my trade. But yeah, that's it.